On Sunday night, May 3rd, 2026, Wall Street Journal dropped the story. Ryan Cohen, CEO of Gamestop, the meme stock guy, the Chewy founder, just made an unsolicited $56 billion offer to buy eBay, a $12 billion company bidding for a $46 billion valued company. The small fish trying to swallow a whale. Every financial advisor is laughing at this. GameStop buying eBay? Mainstream media is calling it audacious, reckless, and even delusional. But I think they're missing the point, because this isn't a meme stock play. This isn't Cohen being cute with shareholder money. This is something much bigger, and if it works, it changes the structure of US e-commerce for the next decade. Let me show you what I see. Here's the deal on paper. $125 a share, 50-50 cash and stock, about a 20% premium to where eBay closed on Friday. Total deal size, roughly $56 billion US dollars. Cohen's already bought a 5% stake in eBay. He's got a commitment letter from TD Bank for $20 billion in debt financing. And he says he's in talks with Middle East sovereign wealth funds for additional capital. And here's the kicker. If eBay's board says no, Cohen says he'll take the bid directly to shareholders. A proxy fight for the whole thing. In my eyes, it's not a soft inquiry. It's a declaration of a takeover. And the headline number is the least interesting part of the story. The interesting part is why he's doing it. So let's get into it. And before we do, please subscribe to this channel where I post at least 5 videos every week for long-term investors with strategies, breakdowns, and tips. Here's my read on this. Amazon has eaten everything in retail in the last 20 years. New products, cloud, logistics, advertising. They built a fulfillment empire that nobody can compete with on speed or price for new SKUs at scale. But there is one corner of e-commerce Amazon has yet to figure out, and that's the long tail of secondhand goods. Resale, collectibles, authenticated vintage items, trading cards, sneakers, watches, comic books, retro electronics. And why? Because Amazon's entire model is built on identical SKUs at scale. Pallets of the same thing. One of one items break that model. You can't just throw a vintage Rolex into an FBA warehouse and treat it like a phone case. That whole category, resale, collectible, authenticated goods, is estimated at over $350 billion globally and growing roughly 3 times faster than traditional retail. And eBay quietly owns all of that. eBay has been the dominant platform in that category for almost 30 years. They've just been asleep at the wheel whilst running it. And that's the moat that Cohen is buying. Now here's where it gets interesting, because everyone has been asking the same question for 5 years. What is Ryan Cohen actually going to do with GameStop? He raised something like $4 billion in cash at peak meme valuations. He cut headcount, he shut down underperforming stores, but he kept thousands of physical retail locations open, and nobody could figure out why. Now we know. Cohen explicitly told the Wall Street Journal that GameStop stores would become collection and authentication hubs for eBay sellers. Think about that for a second. You're a seller and you've got a vintage Pokemon card, or a graded sneaker, or a luxury watch that you want to sell on eBay. Right now, you take photos, you ship it, the buyer prays it's real, and if there's a dispute, eBay plays referee. Cohen's vision is that you walk into a local GameStop store where trained staff authenticates the item, photographs it professionally, and ships it. The buyer gets a verified product. The seller gets paid faster. eBay gets higher trust, fewer disputes, and higher take rates. The dying mall footprint that everyone laughed at, suddenly it's the moat, because Amazon doesn't have that infrastructure. They'd have to build it from scratch. And that's not a meme, that's a strategy. The other part of this puzzle is live commerce. And this is something that most American investors are sleeping on. In China, Taobao Live, Alibaba's live e-commerce platform, does over $500 billion a year in gross merchandise volume. Real-time video, sellers showing products live, with viewers buying instantly. In the US, basically nobody has cracked that yet. Amazon Live exists, but it's a ghost town. TikTok Shop is trying, YouTube Shop is trying too, but none of them have figured it out yet. Cohen explicitly said that he wants eBay to do more live selling. Combine that with authenticated collectibles in a GameStop store, broadcasting live with a real human you trust on camera, unboxing and verifying. That is a new form of e-commerce that doesn't yet exist in America. And if he pulls it off, eBay isn't an old auction site anymore. It's a live, authenticated secondhand platform, and it's the anti-Amazon stack. The bull case for this is that Ryan Cohen has done a version of this once already. He took a small online pet supplies brand and turned it into a $3.4 billion exit to PetSmart. He understands e-commerce, he understands customer experience, and he genuinely outworks his competition. eBay has had a spectacularly bad run for the last decade. bloated, slow, and no real innovation. The strategic logic of authenticated goods, plus physical infrastructure, plus live commerce is real, and Cohen takes no salary. His entire compensation is tied to GameStop, hitting $100 billion market cap and $10 billion cumulative EBITDA. If he misses, he gets 0, so that's serious skin in the game. Now for the bear case. Hostile bids for a company 4 times the size, financed with leveraged debt, historically end badly. The eBay board is probably going to fight this, and the proxy battle could drag on for a year. GameStop shareholders face massive dilution if this gets done in stock. The anti-Amazon pitch is a graveyard. Jet.com tried it, Boxed tried it, Brandless tried it, all are dead, you've never heard of them. And Cohen has executed brilliantly at GameStop's capital structure, but he hasn't actually proven that he can run an operating business at this scale. Both cases, the bull and the bear case, are real. Anyone telling you this is a slam dunk in either direction is trying to sell you something. My actual take is I'm not telling you to buy GameStop. I'm not telling you to buy eBay. What I'm telling you is this is one of the most interesting structural plays in US retail right now, and you should be paying attention. The thing I'm watching this week is the spread between eBay's stock price and the $125 offer. If eBay trades close to 125, the market thinks the deal closes. If it trades at 105, 110, the market is going to be skeptical. That spread is real-time deal probability, and it will tell you more than any analyst note. I'm actually watching whether also the sovereign wealth backers actually materialize, because Cohen mentioned those Middle East funds, and if this gets serious, it gets real fast. If they ghost him, the financing wobbles. And finally, also watch for eBay's response in the next 7 days. If they reject hard, it turns into a proxy war, and the volatility on both stocks is going to be enormous. If they engage, we're in for a real interesting time. So take notes, keep an eye on it, and I want to leave you with this from Sun Tzu. He will win who knows when to fight and when not to fight. Amazon has spent 20 years winning every fight it picks. Cohen isn't picking that fight. He's picking the one Amazon doesn't want, the second-hand economy, the authenticated economy, the trust economy. Whether he succeeds or not, he understands something most CEOs never figure out. You don't beat the giant by attacking where it's strong. You take the territory it's ceded. If you got value from this video and you want more videos like this and for long-term investors, please subscribe. I post at least 5 per week.